I want a 2.5% weighting in Bitcoin in any portfolio, and I do a 2.5% weighting in Ethereum, and both have performed very well for me. And there's a strategic reason I do that, because I can wrap Bitcoin and Ethereum and get yield on my portfolio every month.
Welcome back to the Being Crypto podcast. We've all heard the sound bites, the famous talking heads who once called Bitcoin garbage or a scam. But what happens when one of those voices, like Shark Tank's Kevin O'Leary, completely reverses course? Today, we're joined by Kevin himself and Mohammed Bakhashwain, the CEO of Bitzero, a company Kevin backs and invests in. In this conversation, we'll get the exclusive story behind his change of heart. Let's dive in. Welcome to the podcast, Mohammed and Kevin. It's so great to have you.
Thank you.
So some context for our listeners, Bitzero is a Bitcoin mining and high-performance computing company that focuses on clean energy and environmentally aligned infrastructure. It operates in countries like Norway, Finland, and across North America. Among the company's central pillars is the belief that crypto mining can evolve into a backbone for future computing industries like artificial intelligence. So I wanted to dive right in with a question for Kevin. Kevin, you once called Bitcoin and most tokens, quote, garbage on CNBC in 2019, arguing it was too volatile and illiquid for serious investors. But now you're a vocal supporter. Has your stance changed only about Bitcoin or for other leading cryptocurrencies as well?
You know, because I love it when people shove that interview in my face. They do it all the time, because it's ironic. You have to remember, back at that time, the regulator was not on board. It was a hostile regulatory environment in every geography, not just the United States. And governments are trying to get their heads around what to do. And I was already a registered issuer of mutual funds and ETFs. So I didn't have any choice but to take a stance in alignment with regulators. Now, when things started to change, notably in Switzerland and Canada, where they brought the first ETF for Bitcoin, then I also changed, because I'm an investor. And I said to myself, wait a second, if the institutions are allowing this in Canada and Switzerland, and then Australia, and then England, it started to, domino effects started to occur. In those markets, I started to allocate to Bitcoin. Now, we've come a long way since then, and I'm obviously a very well-known crypto investor in both the infrastructure of crypto, which is why I'm involved in Bitzero, the making of Bitcoin, in a way that's very efficient, because that's one aspect. And I also own tokens. And so I also have a whole research team that works on this now. So if I want exposure to crypto, I only need 3 positions now. I used to have 27. But if you look at statistically, the volatility of just Bitcoin and Ethereum and a stable coin for liquidity, we pick your stable coin. Some people like Tether, some people like USDC. That's all I need to own. And so I'm with this whole thing with Bitzero is, how am I solving for 2 things? One, I want a 2.5% weighting in Bitcoin in any portfolio. And I do a 2.5% weighting in Ethereum, and both have performed very well for me. And there's a strategic reason I do that, because I can wrap Bitcoin and Ethereum and get yield on my portfolio every month. So that's what I do. I'm not telling people what to do, but when I own assets, I want yield. I want distributions. I want something while I'm waiting for price appreciation. And so that's how I do it in crypto. I'm getting a 3.88% yield on my stablecoins. And so the whole portfolio is liquid, but also has a distribution each month. So I'm happy with that. Now to Bitzero. I have never found a company that has lower cost power than Bitzero. The lowest cost power. That's what this is all about. Bitcoin mining is about power. I mean, that's what you need. If you don't have low cost power, you may not make any money mining. And so that was some for my allocation for the infrastructure equities that I own: Bitzero, Coinbase, Robinhood. Robinhood just bought my exchange business in Canada. It was called WonderFi. So, it's sort of, that's it for me on crypto. It's a 20% weighting for the sector, but it involves obviously Bitzero and of course my strategy with Ethereum and Bitcoin.
It's very true that Bitcoin and the crypto industry have come a long way since 2019. Bitcoin's price has come a long way since 2019. Mohammed, I wanted to ask you about Bitcoin's price. It recently dipped to 112,000. Do you think that the 110,000, 120,000 bracket will be the price range for the rest of 2025? Or do you believe that we might expect another bullish cycle before the end of the year?
That's a tough call, but if history tells us anything, this Q4 could be unpredictable. It could go either way. It could go all the way up to new highs, and it could maintain its kind of 110 to 125 range that it's been in. That's all going to come down to certain events in basically the market and regulation and a lot of adoption that's going on with crypto treasuries and other initiatives that different companies are taking right now. Um, we hope that it will have the bullish cycle that it did have on the same Q4 of every cycle, but it's uh, it's not a usual cycle, let's say, with all the change in regulation, with all the additional adoption, with all the treasury strategies that are starting to go out there and policies that are being wrapped around Bitcoin. And that's something Kevin would know more than I do about because he's closer to the policy making there. But yeah, that's my take on it. If we're looking, one side is the historical performance, the other side is basically how unusual this cycle is, which we are all excited to see what it will bring. And even there's uncertainty about having another crypto winter with all this adoption. Like it's really a pivotal point for the crypto industry and Bitcoin specifically.
Yeah, absolutely. You actually mentioned something really interesting. You kept talking about treasury companies. A lot of institutional players are now shifting to Ethereum. There's a big wave of Ethereum treasury companies happening over the past few months. And some even think that the Bitcoin investment space is now too narrow and the profitability scope is lower than Ethereum or even other blockchains like Solana. Mohammed, what's your take on this?
So I'd like to look at Bitcoin like gold. You might have a narrower upside that you can clearly see, but you are, as Kevin calls it, you are investing in the granddaddy. So that's why you'll have a narrower upside. People see more upside in Ethereum because it has underperformed, but history tells us that it does catch up. And from historical patterns and also the upside that is expected for Ethereum, it has more clear space to catch up with the performance of Bitcoin. So if you compare the performance of Bitcoin and Ethereum in previous cycles, Bitcoin has performed compared to Ethereum. Ethereum still has space to perform. And that's where I see people are basically getting that thought from is, okay, there's more space in Ethereum, but if I was hypothetically to say I would do that now, once I see that run, I would swap Ethereum back to Bitcoin. So I believe that's where everyone's head is at, because you see people swapping Bitcoin to Ethereum, like we saw last week when that drop happened. 2 billion worth of Bitcoin was sold and swapped into Ethereum, and that's specifically the reason why.
Kevin, I wanted to ask you about your investment in Bitzero. With your investment, Are you betting more on Bitcoin as digital gold or the value of Bitcoin? Or are you more betting on energy and infrastructure that can outlast the crypto cycle?
Well, I don't think we'll ever outlast the crypto cycle. It's here to stay. You mentioned the Treasury deals. The only reason they have been so popular and will remain so is that many, many, many institutions are still not permitted by their compliance departments to own anything directly because the Clarity Act, which is actually the Infrastructure Act, is not passed yet. I'm a policy guy. I spent a lot of time in Washington. When we passed the Genius Act, that opened up, and let's talk about the surge of Ethereum. Why is Ethereum surging? Because most investors now realize that it's how Wall Street's going on chain. So you had two momentum drivers. Number one is when the minute the Genius Act was passed and stablecoins became legal, well, where are most of those transactions occurring? On chain on Ethereum. And I know Solana is being discussed a lot, but it's not yet anywhere near globally in terms, I'd suggest right now 40% of all transactions on stablecoins are occurring on Ethereum. In addition to that, if you ask any institution how they're planning to go on chain right now, their own people are saying Ethereum. And so that's another fact. But the one that got me into Ethereum was simply, I can stake it and I can wrap it around my Bitcoin and I can get yield. And I'm, as I said earlier, a yield guy. So all of those reasons make me have both, and I'm going to stay with both. But the Bitcoin, the investment in strategy, when I own, I guess a good analogy would be this. If I had to start, 300 years ago investing in gold, I would have invested in gold miners, companies that made jeans, picks, and shovels. And I would have done much better than just owning gold. So the reason I own Bitcoin is for the reasons we've discussed, but the reason I own Bitzero is they mine Bitcoin. And they're actually a power company. That's what they are. They don't care whether they're mining Bitcoin or providing AI services in Finland to a hyperscaler. They have the power contracts, they have the land, they have the fiber, they have the permits. Those are very valuable. Meanwhile, every day they're mining Bitcoin. So what's not to like? I like everything about it. And that's why I got involved. And I think it's going to be a very interesting company because I'm learning one thing about everybody else in this space. They have no power. Everybody's struggling to find power on the grid in the US and North America, and they're paying a lot for it. And we're paying a fraction of what they're paying in Bitzero because Mo is smart enough to secure these contracts and then doing it again in Finland. That's what this deal's about.
That's a perfect segue into my next question. It's directed at Mohammed just because he's the CEO, but please feel free to jump in with anything you might add. I wanted to ask about the current situation in the United States with the tariff applications, the reversals, and the political and economic instability that comes with that. I know Bitzero recently moved some operations from New York to other countries like Norway. And I wanted to ask you, what that says about where Bitcoin mining can really work. Is the US an unstable place for mining businesses to grow at the moment?
So not unstable, but as Kevin just mentioned, pinning down power, especially power that is stable and also long-term efficient and well priced, is becoming more challenging by the minute. And as well, the power, basically power in the US in different states have different regulations, different rules, different policies. So to navigate in the US, those different policies, different federal plus state laws, co-ops, etc., that makes it a bit more complicated for Bitcoin miners, and to also operate in a place where you don't impact the local communities and you don't impact the power price of domestic use of power. All of these things put together will create a challenge for basically a barrier of entry to mine Bitcoin in the US, especially with the press around with the negative press around the use of energy tied to Bitcoin. So that's one side to it. The other side to it, yes, policy is loosening up, regulation is becoming more kind of taking crypto into account. But I believe it's going to take a bit of time for the state/federal to be in harmony to allow basically the growth that is required and the security that's required for businesses to grow the way they want to grow in the US. And on New York, which you touched on, that was a very early discussion in the Bitzero story, and the reason we had cut that in its tracks is policy. It's not to do with energy or anything. There was uncertainty around policy, especially in that state, and that's why we have shifted our focus back then to Norway and generally to the Nordics.
Yeah, absolutely. In New York, there's a lot of uncertainty over policy and crypto. So, touching on that, which US states do you think provide a more favorable environment for Bitcoin miners?
Off the top of my head, I would say Texas, but I'm not sure how clean that is. But I would say Texas is the most friendly so far. Most of the largest players are located there, and we see some presence for some companies in Ohio, some in Minnesota, not at the scale that they are in Texas, but yeah, like a few states in the Dakotas, they're starting to accommodate Bitcoin mining. We have a facility there. However, for us, that facility is more of a long-term asset. We look at it as a long-term because there's a lot of infrastructure development that needs to go in there. And for Bitzero, basically coming online quick is where we're gonna invest most of our capex right now. And we have that opportunity in Finland and in Norway that will allow us to provide the best returns to our investors in the short and medium term, while North Dakota is a long-term asset for us.
I find it really interesting. Kevin, did you want to add something?
No, I don't think it's easy to light up in the US in any state if you're attaching to the grid. And I've seen what happens because power authorities, I'll give you an example, Oklahoma. There's a lot of interest in Oklahoma until you realize there's no power there. There's 3 different power authorities in Oklahoma. You can get land, you can get fiber, you can get permits, but you can't get power. And one of the reasons you can't get power is if you ask for, let's even say 250 megawatts, which is not a lot anymore, by the way. People are looking for at least a gigawatt. You'll cause the ratepayers increase of 15% in the town you're putting that facility. 15%. The mayor of that town will immediately shut down your permits. They have no interest in letting you cause ratepayers, residential ratepayers, schools, libraries, all of that stuff to have a 15% increase in their power rates. So you have to actually do something off grid, which means natural gas. So that means you have to invest in the power itself in turbines, and you have to get some kind of a nat gas or stranded nat gas strategy. And the only states you can do that in right now are North Dakota and West Virginia, and some in Virginia, but that's kind of tapped out right now. And so very few places can you pull this off. There's a couple of other places in North America, but they're in Canada, in Alberta. There's been mining in Alberta, but the whole idea, and I think Mo touched on it, Bitcoin mining is about power. And when people ask me, well, it's bad to use power to mine coin, I say, no, it's if you have a waterfall or hydroelectricity and you're not using it, the way you monetize it in perpetuity is you convert it into a token. You turn it into Bitcoin. So people are warming up to the idea that this is actually a good use of energy if you can in fact do it off grid. Now, if you get a grid deal in a country like Norway or Finland, whether it's nuclear power or it's hydro, where they have an abundance, and you can get it under 4 cents, I mean, that really, really is attractive because there's no policy shutting you down there. There's no mayor of the town saying we don't want this. In the US, that is your problem.
That's really interesting. Both of you have been making distinctions throughout this conversation about whether this use of energy is actually clean. And in the crypto space, there's a lot of criticism over companies that engage in greenwashing or only try to comply with environmental, social, and governance principles to check something off a list. What's one hard metric? Maybe I'll direct this question to Mohammed. What's one hard metric you use at Bitzero that proves that Bitzero isn't about greenwashing? It's actually about being environmentally friendly.
Well, we have a very large statement, which is a site in Norway that operates at 100% hydroelectric power. And it's excess power, excuse me, it's excess power that is not being consumed if we are not consuming it. Just to give you an example, so the transformer we're pulling the power from is actually providing a load of just under 50 megawatts for the operational capacity. The whole area that is connected to the same power lines is consuming just about 6 megawatts, and the rest of it is going to waste if we're not using it. So the power price for the domestic use remains the same, and actually the local communities are benefiting. The municipality is making revenue out of our consumption, which helps them to invest more in their communities. And basically that cycle clearly shows that we are consuming power that's not being consumed, making revenue for the municipality that they can use to improve the lives of their residents, and we're not affecting the residents by increasing power prices, and we're operating on 100% hydropower. So, and that's not even touching on any heat reuse that we are planning or we are building. So just by us consuming it, we are providing a lot back to the community and to the municipality and to the environment.
That's really interesting. I wanted to wrap up this conversation by touching on Bitcoin treasuries once again. Kevin, I'm going to ask you this. Public companies at the moment, they're loading up on Bitcoin by issuing debt. Michael Saylor's MicroStrategy is a perfect example of this. It's a pretty risky strategy if the market turns and if Bitcoin's price plummets. Do you believe that that kind of risk could have spillover effects on miners and on Bitzero as a company?
You know, if you go back, and obviously the market makes its decision every day by pricing Bitcoin in a fluid 24-hour cycle. Using leverage is not uncommon in many strategies, and it just depends how much. And the analogy I use most often is because my largest investments are in real estate and real estate development, both commercial and residential. And real estate goes through cycles based on interest rates, very much akin to what we're talking about here on debt on leverage strategies. So what history tells you, if you get over 60% levered in real estate, it's proven to be the case for 200 years almost. When the cycle shifts on you, in other words, when rates go up, anybody with a 60% leverage ends up having to sell equity at some point to stay liquid. So I live off a ratio of more like 30% leverage so that I never get in a situation where if the underlying, which is either interest rates or the price of real estate drops 50%, I'm wiped out. But it's important for me that people do stupid deals because that's where I buy my assets from. So I'm the guy that waits for the idiot manager to blow up with too much leverage. And this is a game that's played forever. And so they get great returns. They get 23% returns on buildings where they put 75% loan to value in the construction financing and then 50, 60% leverage on stabilization in real estate. They make more money than I do. But every time, it used to be every 7 years, now it looks like it's going to be every 15 years, when they blow up, that's when I buy the project and my returns are, maybe 8 to 11. I'm an 8 to 11 lower leverage guy. So Will I use leverage on my Bitcoin portfolio? Yes, but not at 60%. And so I'm more conservative. So really these treasuries that use leverage, there's nothing wrong with it as long as you know what you're buying into. And if it says it's 60, 70% leverage, I don't go there. But for me, and I'm just one investor, for me now, after all these years of owning tokens, and I went through the whole FTX thing and all that stuff and the circle, I was there at the founding stages. I want yield every month. I want a check. That's what I ask for. And so that has taken me to a new place, primarily focused on just 3 assets: Bitcoin, ETH, and a little bit of stable coins. And I'm a happy camper, and I hardly have any leverage on it, max 30%. And so I go to sleep at night. And if, tomorrow morning we wake up and Bitcoin's down 25%, which could easily do, it's done it before, doesn't change my life, doesn't make a difference. And I'm happy to buy more. I like the vol in Bitcoin. I actually like it. And my long-term prognosis is it's, as Mo said, gold. So why wouldn't I have a 5% weighting in that token alone? Of course I would. But is it going to be volatile? Oh, yeah. I mean, I don't know about Q4. We've already seen that. That 2 billion was a wake-up call that Mo made reference to. That was a big trade. That's still a big trade in Bitcoin. And it's not such a big trade in other asset commodities, but it just tells you there's vol ahead. But it's all about leverage. And, the only way you learn about leverage, when you're a young buckaroo investor, you get wiped out with leverage. It only has to happen once, and you learn your lesson. You get your fingers burned in the fire. Even that's happened to me. I'm not stupid that way anymore, but you have to go through it. You think you're, invincible, that you're going to live forever and you can lever everything to 100%. Then you get your ass fried. And then you learn, oh, this is dangerous. And then you become like me, conservative, boring even. But I love my positions now. They're great.
That's a really good educational note to end on. Kevin and Mohammed, thank you so much for coming on the podcast today. I'm sure the knowledge you've shared will be really valuable to our listeners as we prepare for this next step in the crypto sector. I really hope to have you back again soon. Thank you.
Take care, everybody. Thanks.
This was a great discussion, and you shared some truly valuable insights. To our audience, thank you for tuning in. Be sure to subscribe to our channel for more informative content coming your way. Until next time.